Hello everyone. So last class I discussed and review the equity method, right? And today we are going to solve the consolidated financial statements. We are going to solve the consolidated financial statements based on the equity method. So if you don't remember the equity method, go back to my previous class because if you don't have clear understanding about the equity method, it is difficult to solve this question. So this is the question about on January 1st, 2020, the Parker company purchased 90% of the outstanding common stock of seed company for $180,000. So date is January 1st, 2020. And the parents company is the Parker company, acquired 90%. That means we have NCI remaining 10%. So we have to establish non-controlling interest 10% NCI, and seed company means the subsidiary company, and this is the initial investment. This number is important for the equity method because it's the initial investment. However, we find that in the balance sheet or trial balance, we have another number of investment. So investment in subsidiary according to the trial balance, that means at the end of the year, there is some mistake here. So December 31st, you can see the December 31st, we have the ending balance and we find that the investment is $184,000, 184 and 500. But initial investment is $180,000. So why these two numbers different? These two numbers different because of the equity method. Because whatever you have net income, whatever you have net loss, whatever you have dividend, we adjust with investment account. Can you remember the equity method? According to the equity method, we adjust our net income from subsidiary, net loss from subsidiary, and dividend from subsidiary with only one account, and this is the investment account. So that's why we have different investment here. So these two numbers different, but we have to convert it. We have to convert it 184,500 to our initial investment. Okay. Anyway, so at the time, subsidiary company's stockholders' equity consists common stock $120,000, other contribute capital $20,000, and retained earnings $25,000. So we know the initial investment on January 1st, and we know what is the book value. What is the book value of subsidiary? 120 for common stock, 20,000 for additional paid-in capital, and retained earnings $25,000. And if there is any difference between the market price and the book value, that means any difference between implied value and book value, okay, we are going to allocate this to the land account. So previous example, that means last class, we find that if we have any differences, we attribute the differences to the goodwill account. But here I change it to the land account, okay, to give you more comprehensive example. Or I can allocate to the another asset. It doesn't matter at this moment actually. Anyway, so this is the information based on January 1st, 2020. And 1 year later, December 31st, 2020, we have following balances. So these are Parker companies, asset, expense, and dividend. This is the subsidiary company's asset, expense, and dividend. This is the Parker company's liabilities and equity, sales, equity income, and this is the subsidiary. So this information are given based on the trial balance, and the requirement prepare a consolidated financial statements through work paper on December 31st, 2020. And this is the work paper. This is the work paper. We have to solve this question through this work paper. But as we already have, according to the question, as we already have 10% NCI, It means that we only acquired 90%, remaining 10% is for NCI. So we have to prepare a schedule for NCI. That means some part goes to the parents company, some parts goes to the non-controlling interest. So NCI, so this is the NCI. Here you should remember that. We should remember that this is the two part of the CAD schedule. I told you that we have to prepare the CAD schedule. Last several classes, I also explained this schedule. So I am not going to explain too much. How this number came from, we have to understand. So total value $100,000, 100% is $200,000. It is not given here. It is not given any part of the question, but you have to calculate what is the total value of this company. Okay, because we paid $180,000. We paid $180,000 for 90%. For 90%, right? So equal, we are going to get $200,000. And this is 100%. So $200,000 is the 100% value of this company. Okay, total implied value is $200,000, but we received only $180,000. This is the parents. Parents company received 90%. So total $200,000, 90% goes to the parents company, 10% goes to the NCI. So this is the implied value. This information is about the implied value. Now we have to compare implied value and the book value, and this is the book value. These three account, I mean common stock, other contributed capital, and retained earnings. These three are the book value of subsidiary. Now these book values, 90% goes to parents, 90% goes to parents, and 10% goes to non-controlling interest, right? So this is the total book value, $165,000 total book value, right? And according to this information, 90% goes to parents, 10% goes to subsidiary. Now we find our implied value and we find our book value. And the question said that if there is any difference between these two, remember the question. Question said that if there is any difference between book value and implied value, any difference between book value and the implied value, we are going to allocate to the land account. So we find that there is a difference. According to this question, we find there is a difference, right? Because you see that implied value is higher and the book value is lower. So there is a difference. And the difference is $35,000. Difference is $35,000. 90% difference goes to the parents and 10% difference goes to the NCI. So we find the difference. Now question said that we have to make our difference zero, right? We have to make our difference zero. Why? Because the difference we are going to allocate to which account? To the land account. So how to make difference zero? How to make it zero? So minus, yes. If similar amount we minus, we become zero, right? So it is zero and we transfer it to the land account. So whether it is cost method or equity method, this is the first step. Okay, this is the first step you have to do because we have established our NCI. And this $20,000 is the beginning NCI. Okay, this $20,000 is the beginning NCI, right? Because this calculated from the beginning balance, right? And here we have worksheet. Here we have worksheet, NCI column, and we have to calculate ending NCI later on. That I am going to show you very soon. But we already know that. We already know that beginning NCI is $20,000. Now this is correction mistake 2020. So we are going to prepare the consolidated financial statements. Consolidated financial statement means income statement, retained earnings statement, and the balance sheet. Okay, and the balance sheet. So first we will go step by step. First we are going to solve these two parts because these two parts are related with the trial balance. we cannot change this column, right? Because this information will come from our trial balance, and we have to calculate something balance. First, this is the income statement. It starts with revenue, right? It starts with revenue. So don't forget that it is the equity method. So we don't have any dividend revenue. Cost method have the dividend revenue, but equity method do not have any dividend revenue. It have equity income. It have equity income. So go to the trial balance. We find these two. These are the revenues. Okay, these are the revenues. Sales, $300,000 for parents company. Subsidiary company is $95,000, and equity income is $18,000. Okay, this equity income is $18,000, and this income came from subsidiary. So, right? So I copy and paste here. Yes. So income statement start with sales revenue, and if it is cost method, we will write here dividend income. Now we write here equity income. Now we can record the total revenue. So what is the amount of total revenue? It is $318,000 for parents company and $95,000 for subsidiary company. So we find revenue, right? Now next is expense. It is given in the question. Just copy and paste. So these are the expenses. Cost of goods sold and operating expenses, right? Now we copy and paste here. Now we have to calculate the total expenses. Total expenses. So the total expenses is here $185,000 and $75,000. Now revenue minus expense equal net income. So net income, we find that it is 133,000 and 20,000 here. Okay. So look at here, 20,000 net income is the subsidiary, right? And 90% net income is our net income. And this is 90% is the $18,000, right? 19,000 is $18,000. We record it as our net income. Anyway, so this is the net income, and we know that this net income parents company, this net income subsidiary company, right? Now we have to create a new cell. We have to create a new cell, NCI or net income NCI. So what should be the net income of NCI? We will write here later on. So this number we will write later on. I will show you later. But we have to write something here, because if you can guess this number now, if it is $20,000 subsidiary, right? 90% is our parent and 10% is subsidiary. So you can guess this number is $2,000. Okay, so I will show you later on, because we have to go step by step. We have to go step by step, but we have to create a new cell for net income of NCI. Now we can create a total net income. Net income, this is the total column. Because we have several net income, right? So we make it now as a total. So if we calculate total, we find that here it is $133,000. It is $20,000, and another will come here, right? Yes, another will come here, and you can easily guess it is 2,000. I will write later on. Yes, so we find net income. So this part done. This part done. Just we create only one new cell for NCI. Now retained earnings, you know that this is the beginning balance. Of anyway, beginning balance of retained earnings. It is given in the question. Beginning balance. Retained earnings. So this is given parents company and the subsidiary company, right? So you copy and paste here. Beginning balance. And we know the formula. Beginning balance, if we have net income, then plus net income, we have net loss minus net loss, right? So this question we have net income plus net income. And I keep the pink color here because I told you that we already have net income total column here, right? Whatever we have everything here, it should come here. Clear? So at this moment, we have only two numbers. We have only two numbers, we copy and paste here. We copy and paste here. If we have any number here, we have to copy and paste here. I repeat again, look, if we have any number here later on, we have to copy them and paste them under same cell. Yes, so at this moment, beginning retained earnings plus net income, and we know that the formula is minus dividend. Minus dividend declared. Minus dividend declared. So dividend declared is given in the question. It should be the debit side, yes. So dividend declared. Parent company declared $20,000. Subsidiary company declared dividend $15,000. Again, for your information, subsidiary declared dividend. So you can use minus sign or not anyway, because I already put minus here anyway. So don't forget that this is the dividend declared by subsidiary. 90% is our dividend. Okay, 90% is our dividend, and another dividend will come here under the NCI. Can you guess what should be the amount here? If dividend is $15,000, okay, and this 90% is ours, right? And 90% it is included in our investment account, because we know that according to the equity method, if we receive dividend, our investment will decrease. So it is adjusted with our equity account, sorry, investment account. Another 10% will come here. I will show you later on. Do you understand? Yes. Now, ending balance. So beginning balance plus net income minus dividend equal ending balance, and the ending balance is $168,000. And it is $30,000. So we find ending balance, and you know that under balance sheet, we should have also retained earnings here, and we'll copy and paste from this cell. Anyway, we done our retained earnings part. We done income statement, we done retained earnings. Now we are under balance sheet. Okay, and you know that balance sheet follow assets, liabilities, and equity, right? So we have this in the question. These are the assets. Up to here, these are the assets. These are the assets, right? Yes. Assets. So we find our assets. Then we are looking for the liability. Anyway, so whenever you put asset, okay, immediately you have to, after writing all assets, this is my suggestion. That means so that you will not do the mistake. So after writing all the asset, just create a new cell for the difference. Difference between book value and implied value. So this is my suggestion, that if you don't forget this, I mean, if you forget this, then you cannot solve this question 100% accurate. Why? If you remember, the question said that we have to create a difference between book value and implied value, right? And if we have any difference, we are going to allocate this to the land account according to this question. Okay. If the question said that we have to create another account, goodwill, then we have to create a new cell here. This is based on your question. You have to read the question carefully. If question said that difference is going to allocate goodwill, goodwill is our asset, right? We create a new cell for goodwill. But this question said that we allocate this to land. So we don't need any other new cell. Okay, any other new cell. So this need your practice. And you can use pencil so that if you have any mistake, you can do it. Yes. So after creating a new cell for difference, then we are going to write the liabilities and equity. Liabilities and equity. So these are the liabilities. These are the liabilities and the equity. So these two liabilities and these three equity. Okay. So retained earnings already have a column. Let me copy up to here. Because we already write retained earnings, right? You understand? We already write the retained earnings. Anyway, I can copy everything. So you can see that I write all the assets here. Then I write liabilities, then equity. And this retained earnings is the ending balance. This retained earnings is the ending balance. And I copy ending balance from here. I copy ending balance from here and I put here. Do you have any question up to here? So this is not the beginning retained earnings. Don't forget that. This is not beginning retained earnings. Beginning retained earnings is here. Okay. And under balance sheet, we should have ending retained earnings. I can note it here. End balance. Now we can add total assets. What is the total asset? Total asset is $473,000. $210,000 is the total assets. And again you know that. What is the formula for balance sheet? First, we will write our asset. Okay. Then if we have any difference, we will calculate the difference. Then liabilities, equity. And if you remember, under equity account, we have to create another cell for non-controlling interest. So NCI, beginning balance, and we should have NCI ending balance. So this is the new cell. This is the new two cells you have to create, because we already established our NCI column here. We already established our NCI column here. And if you remember, this is the beginning balance, $20,000. Can you remember? $20,000, right? Beginning balance. So I will write this one later on again, but I just show you now. Then we have to calculate ending balance here. And I already told you, I can write here now, or I can write later on. How to calculate the ending balance, I will show you later on. Okay. So we have to create two new cells for beginning balance NCI, ending balance NCI. Then finally we write total liability and the equity. And it is this number. Okay. To solve the question accurately, look at here. We create two new cell here, and we create another new cell for the difference. Something like this. So this need your practice to remember how many cells you have to create. So we done our trial balance part. We calculate net income. Okay. We calculate retained earnings ending balance. We calculate our total assets. Okay, this is the total liabilities and the equity. So we done this part. Now, as it is equity method, your first elimination entries should be related with this account. Try to understand how we get this number. Although this is our initial investment, right? This is our initial investment. How we get this number? I can show you some workings. How this number came. Look at the workings here. This is our initial investment, right? This is our initial investment. Now, can you remember what is the net income of subsidiary? Net income of subsidiary is $20,000, right? Net income of subsidiary is $20,000, and parent company is going to receive 90%, right? 90% means this is 18,000. 18,000. Do you understand? It is from previous class. And what is the dividend? According to this question, dividend is 15,000. Dividend is 15,000. 90% goes to parent's company. 90% goes to parent's company, and it is 13,500. 13,500. Now you can see that 180. So investment equal 180,000, right? 180,000 plus 18,000 minus 13,500 equal 184,500. Clear? So this 184,500 is here. This is the number. Okay. Clear? No. This is not required. This is for your understanding. Yes. That means how this number came. Now, when we do the elimination, eliminating entry, we have to eliminate actually $180,000. We have to eliminate our initial investment, right? We have to eliminate our initial investment. Now, these two accounts, you remember that these two accounts, that means $18,000 and 13,500. So these are called intercompany transaction. That means the transaction between parent company, okay, transaction between parent company and subsidiary company. It is called intercompany transaction. So if we have any intercompany transaction, we have to eliminate this. We learned from chapter 3. Also, we learned from chapter 4 and the cost method that if we have any intercompany transaction, we have to eliminate this. So look at here, equity income and dividend. These two accounts are the intercompany account. So this is intercompany transactions. So if I mark underline, these two are the intercompany transactions, right? Now these two, as they are the intercompany transaction, we have to close them. We have to eliminate them, right? How to eliminate them? What is the normal balance? Normal balance of equity income is credit. We know that, right? And normal balance of dividend declared. Normal balance of dividend declared is debit. We all people know this, right? So equity income and dividend declared, these two accounts are called intercompany transactions. We have to close them. Clear? So if equity income normal balance is credit, to close it should be debit, right? To close it should be debit. So, and dividend declared normal balance is debit. To close it should be credit. So this is the closing journal. This is the elimination entries. This is the elimination entries. And if debit and credit is not equal, if debit and credit is not equal, you know that this transfer to where? This transfer to our investment account, right? Because this is $18,000 credit and this is $13,500 debit, right? So these two accounts is going to close. If we close this, it's become $180,000. You understand my point, right? If we close this $18,000, if we close this 13,500, it converted as 180. Okay, so we are going to do this first journal here. This is the first elimination entry. You can see. I told you that to close equity income, make it debit. If you want to close, okay? If you want to close equity income, make it debit. $18,000 debit. If we want to close dividend declared, make it credit. Make it credit. So these two account close, right? These two account close, and the difference between these two account we transfer where? We transfer to our investment account, right? And we know that we should also close our investment account. We should also close our investment account because this is also intercompany transaction. So this, we close our equity income, we close our dividend declared, and we are going to close our investment. Okay, because we have to close investment total. Look at here. So this is total 184,500, right? 184,500. We have to close this. We have to close this. So 4,500. So how this number? Actually, this number is 180,000 plus 4,500, right? This number is 180 our initial investment, and this is the adjustment from equity. Okay, so we have to close. We have to close this 180,000 and we have to close this 400 4,500. Clear? Okay. So we close 4,500, and we all again close. Look at here. We again close $180,000. So look, we close $180,000 here. We close 4,500 here. So total is $185,000. Clear? So this is the difference between cost and equity method. If you have equity method in the exam, you have to do this carefully. So this is only difference for the cost and equity. So if we have equity method, we have to have this new closing journals, and all other parts are similar with the cost method. All other parts are the similar with cost method. So here intercompany equity income is the intercompany transaction, then dividend is the intercompany transactions, and additional investment here also related with intercompany. We have to close this. And you know this kind of previous closing journal. We close parent subsidiary company's common stock. We close subsidiary company's other capital. We close subsidiary company's beginning retained earnings. Look at here, beginning. This is beginning retained earnings. This is the beginning retained earnings. We close. If you cannot remember, go back to my previous class. Then we establish our NCI. After establishing NCI, we find a difference. And sometimes I told you that sometimes difference goes to credit, sometimes difference goes to debit. According to this question, difference is the debit. Okay. Now question said that if we have any difference, close it and transfer it to the land account. So we close it. Difference now credit. It is closed. And we transfer it to the land account. Land account increase debit. Land account increase debit. This is the closing, elimination journal. So if you have cost method, you have this elimination, right? And according to the cost method, you have additional elimination entry. It is called dividend income. Can you remember? According to the cost method, we have to close dividend revenue or dividend income, but it is equity method. Equity method, we are going to close investment. Look at here, we are going to close investment because this too is connected with equity income and dividend. So this is the additional things. Now the red color here, some are debit, some are credit, right? Debit item goes to the debit side of, this is the elimination entries. This is the elimination entries. Debit item goes to the debit side, credit items will go to the credit side with their account titles. So we already have their accounts title. Now first one you can see that it is equity income debit. I copy it, equity income debit. Where is the equity income? This is the equity income, right? This is the equity income. So it is debit. Then we have another debit here, common stock debit. I write all debit first. Common stock $120,000 debit. I copy. Common stock. Where is the common stock? This is the common stock. $120,000 debit. Then we have $20,000 other contributed capital debit. I copy and I paste here other contributed capital debit $20,000. Then we have $25,000 debit beginning retained earnings. $25,000 debit beginning retained earnings. Where is the beginning retained earnings? This is the beginning retained earnings, $25,000 debit. Then we have $35,000 debit in the difference, right? $35,000 debit in the difference. So we already create a new cell for difference here. We already create a new cell for difference here, and this is the elimination column. Okay, and we write difference debit. We have $35,000 debit land, right? So we have a land account already here. This is a land, $35,000 land. So we write all debit in the debit side. Now who are the credits? Dividend declared, sorry, 13,500 here. Okay, 13,500. So 13,500 debit, sorry, now credit. 13,500 dividend declared. This is the dividend declared sale, right? And this is credit. This is credit, 13,500. Okay. Then we have 4,500. 4,500 investment in subsidiary credit. This is investment in subsidiary. 4,500 credit. Then we have $180,000 investment in subsidiary credit, right? So we can put this number in the same cell. Something like this, or you can write in together 185, no problem. Just I make it separate. Okay, so that you can remember how 185 came. So in the exam, if you write 185 together, no problem. Then we have $35,000 difference credit. $35,000 difference credit. So this is the difference credit. So look at here, difference before debit, now credit, it is 0, and we transfer this to the land account. Okay. So as we already put our elimination column, now we can solve NCI and consolidation together. Okay, so I am now finalize this worksheet. In the exam, you no need to write, but I am writing something for your reference. We know that normal balance of sales is credit, right? That means these two account credit, and we don't have anything here. We don't have anything here. We don't have anything here. So now it is P plus S. Right? So credit and credit now plus the total number here is $395,000. So we find the revenue. We know that equity income also normal balance credit. Equity income normal balance credit. Now this is $18,000 credit, and we have $18,000 debit. So what is the meaning of debit and credit? Negative, right? Negative. So it is 0. It is 0. So what is the total revenue? Now total revenue is $195,000. This is the total revenue. This is the total revenue. Now cost of goods sold, normal balance debit. Then other operating expense, normal balance also debit. Now cost of goods sold, debit and debit here, both are debit. We don't have anything here. We don't have anything here. So this two debit and debit plus. So the number is 210,000. Operating expense, these two are the debit. We don't have anything here. We don't have anything here. So debit and debit plus. Debit and debit plus, and it is $50,000. $50,000. So now if we add this two, it is the total expenses. So we find total revenue. Now if we add this two, it is total expenses, and it is $260,000. $160,000. So look at here, revenue minus expense equal net income, right? So net income is $135,000. So now it is important. Look, this $135,000, it means that it is P plus S, right? It is P plus S, but we know that from S, we only can receive 90%. We only can receive 90%. So we cannot get this number total. Okay, only 90% is ours, and another 10% is whom? NCI, right? Yes, NCI. So this is total, but from here, this 2000 is not ours. Clear? Because look at it, this is a new cell. This is a new cell, right? This 2000 is for whom? This 2000 is for NCI. And remaining 18,000 is our. Remaining 18,000 is our, but this 2000 is for NCI. So that's why we minus this, right? We minus this, and we can put this number, this $2,000, because we have a separate column. We have a separate column for only NCI. Okay, so we can copy this 2000 and we can paste here. Why it is plus here? Because it is their money, right? So that's why it is plus sign. And why we make it minus here? Because this 2000 is not our money. So we minus it. Okay, we minus it and we put it to their cell, to the NCI cell. Do you understand up to here? Clear it up to here? So this is the things you may do mistake. So this $135,000 is the total net income, but we know that 20% of $20,000 is a subsidiary, 10% is not ours. So we deduct this. Clear? Now we done up to here. Now we know that this is the total column, right? This is the total column. So this is the parents company's total net income. This is the subsidiary company's total net income. Now, as it is the total column, we can put this is the total column, right? So 18,000. Here we have nothing. Here we have 2,000. This is the total. And here we have, after deducting this, we have $133,000. So this is the total. This is the total part. The total part of the net income. Okay. So $20,000 is a subsidiary, right? We already received $18,000, and this is intercompany, so we close it, right? Yes. So you understand. Now we know that this pink cell and this pink is the similar. Can you remember? So we already look at here. We already put these two numbers here. We already put these two numbers. 133 and 20 is here already. Now remaining part we just copy. Remaining part we just copy and paste here. Do you understand this? Don't forget this. This is just copy and paste from here, because this is the net income and this is also net income cell, right? All the numbers should be similar. So we just copy and paste here. Now we can do the consolidate, that means make it total. You know that retained earnings, normal balance is credit. Retained earnings, normal balance is credit. So $55,000 credit, $25,000 credit, but $25,000 debit again. So this two is going to eliminate, right? This two is going to eliminate. We only have the parents company's beginning retained earnings, $55,000. Dividend, normal balance debit. Dividend, normal balance debit. So $20,000 debit, parents, $15,000 subsidiary debit, but we have 13,500 credit, right? We have 13,500 credit. So look at here. Dividend $15,000 from subsidiary, right? Dividend $15,000 from subsidiary. We receive 13,500, right? And we eliminate it. What about the remaining? Remaining for the NCI. Look at it. Total is 15,000, right? Total is 15,000. Our part is 90%. Another 10% is for whom? Yes, NCI. It is 1,500, right? 1,500. So this is, don't forget that this is negative because this is minus sign. Clear? I repeat again, 15,000 is the total subsidiary dividend. Parent company received 13,500 and NCI 1,500. Clear? Okay. So after this, what is the remaining account? What is the remaining amount? Remaining should be the parents, because subsidiary already allocated. This is the subsidiaries, right? Already allocated. So the remaining is $20,000. Remaining is $20,000. Good. Now again, this is the ending balance, right? We are going to calculate the ending balance. Now, what is the balance here? It is $43,000. So this is also the total column actually. Total column. $43,000. Here is 13,500. What is the amount here? Don't do mistake here. What is the amount here? 500, okay? Because this 1,500 is the minus amount. Or if you forget, you can put minus here from the very beginning. Don't worry, because it is minus, okay? It is minus. If you put minus sign here, no problem. Anyway, so we have remaining 500. And this $20,000. Okay, I can put, this is minus, you know that, right? This is also minus. Yes. Which one? You understand this two, right? This two is 43 or 13,500. Mistake. 13,500, 500, and this is the minus, right? Because dividend is minus, you know that. Beginning balance, I repeat again. Beginning balance plus net income minus dividend, right? Equal, this is $168,000. $168. Now I told you that we have another ending retained earnings, right? This number we are going to copy. Don't do the mistake. With this number, we just copy and we paste here. That's why I keep the similar color. This cell is the ending balance of the retained earnings, right? And this cell also ending balance of the retained earnings. All are the similar. Okay? All are the similar. Now we can complete the balance sheet. Again, cash, normal balance debit. Now look at here, this to debit. We don't have anything here. So debit and debit plus, it is $100,000. Now accounts receivable, normal balance debit. Accounts is normal balance debit. So these two are the debit. These two are the debit. We don't have anything here. Debit and debit plus, it is $70,000. Inventory, normal balance debit. So these two are the debit. We don't have anything here. Debit and sorry. Debit and debit plus. Where we are? Inventory. Inventory, yes. Debit and debit plus, it is $40,000. Now 180, this is also normal balance debit. We have debit 184,500 and credit also 184,500, right? So we have nothing. Plant and equipment, normal balance debit. Debit and debit plus, we don't have anything here. It is plant and equipment, right? So 128. $195,000. $195. So what about land? We land normal balance debit. Land normal balance debit. So these three are the debit, right? These three are the debit. So land, if we add all together, it is 128,500. 128,500. And difference debit and credit again, right? 0. Debit and credit. Now total assets. Now total assets is 533,500. Liability normal balance credit. Then other liabilities normal balance credit. Common stock normal balance credit. Other contributed capital normal balance credit. Okay. Now you can see that credit and credit plus, we don't have anything here. Credit and credit plus, so it is $35,000. Then other liabilities, this to credit. Now it is $40,000. Common stock, these two close, right? We only have parents company's common stock, $200,000. Then other contribute capital, these two close. Yes, we have parents company's $70,000. $70,000. Now NCI, if you remember our last class, NCI equal beginning balance plus net income minus dividend equal so if you remember last class, this is the formula for NCI, right? NCI already have, we know that what is the beginning balance? Beginning balance is $20,000. We already know this. We already know this, that from here, beginning balance is $20,000, right? Clear? Beginning balance is $20,000. So this is the NCI. This is the NCI column. And beginning balance here. This is the beginning balance. $20,000. Clear? Beginning balance $20,000 plus net income. That means 10% of the subsidiaries net income is their net income. This $2,000. Can you remember? This $2,000 is the net income of NCI. Look, net income of NCI, right? So beginning balance plus net income. Beginning balance plus net income. So this $2,000 is the net income. Net income. And subsidiary company declared dividend, 10% of their dividend is their dividend. Yes, this is 10,000, 1,500, right? Dividend. So dividend is 1,500. Dividend is 1,500. Now you can easily guess what is the ending balance. 20,500, right? 20,500. So we all have information here is that, look here, this is beginning balance, right? This is beginning balance. This is net income, right? Minus dividend, something like this. So we have ending balance is 20,000, 20,500, 20,500. Now this ending balance goes to the consolidated account. This ending balance goes to the consolidated. We know this, right? Ending balance goes to the consolidated. Now we done everything. Okay, we done everything. Now we can make all add together to $53,000 to $53,000, because in the elimination entries, these two accounts should be number should be similar, because elimination have debit and credit. Okay, elimination of debit and credit, so debit and credit should be similar. So if you add these things, you will find this number. Okay, here ending balance is 20,500, and this is the total amount anyway. And here, if we add together, it is like this. So this is about the equity method. This is about the equity method.